Good evening, guys, and welcome to a fifth episode of Quickfire Crypto. Now, today we're going to be talking about an article I found in Al Arabiya News, and it is titled Hong Kong Exploring to Legalize Crypto for Retail Investors. So let's find out what this is all about. Let's get straight into it. So, Hong Kong is back in business and exploring whether to legalize crypto trading by retail investors, the city's finance chief announced on Monday, kicking off a week of conferences aimed at resuscitating the Chinese hub's image. In contrast to mainland China, where crypto has been all but banned. In fact, guys, I think it has been completely banned in China at the moment. I know mining is completely banned. So we had a huge amount of the hash rate move from China, that's Bitcoin's hash rate, to Uzbekistan, because I understand they have very cheap energy. So let's go back. Hong Kong is looking to relax regulations and claw back some of the business that has left. Years of strict pandemic controls and a political crackdown have hammered the Asian finance hub's economy and sparked an exodus of talent that authorities say they now want to reverse. I bet they do. A fintech conference opened on Monday and will be followed on Wednesday by a finance summit attended by some of the world's top bankers. Hong Kong is open and inclusive towards the global community of innovators engaging in virtual asset businesses, Finance Secretary Paul Chan told delegates at the fintech conference. In a great many ways, we are telling the world that we are back in business, he added in a speech that had to be delivered remotely after he caught COVID last week during an overseas trip. In a new policy statement, the government said it would launch a consultation to explore how the retail segment may be given a suitable degree of access. It added that Hong Kong was willing to review property rights for tokenized assets and the legality of smart contracts. Currently, Hong Kong restricts exchanges to clients with portfolios of at least 8 million Hong Kong dollars or $1 million US dollars. Expanding permission to retail investors would allow far more regular residents to invest in cryptocurrencies and virtual assets, but that carries its own risks. There has been a global push to regulate the crypto market and protect investors following wild swings and a string of high-profile collapses. Critics, however, say crypto is an ideal tool to generate investment bubbles, hide illicit wealth, and enable scams. This is just another example of crypto finding its way into the financial markets. Hong Kong, as I'm sure our listeners are aware, is the financial hub of the world because of its low corporate tax. It just attracts business from and bankers, and especially from finance companies from all over the world because of that low because of that low tax. So I think that they're going to just be I think they're trying to embrace crypto and trying to think of ways, if they embrace it, how can they regulate it? How can they stop people getting ripped off? How can they stop scammers? And it's very difficult because crypto by its very nature is decentralized. There is no central organization to attack or to regulate or to control. So it's almost uncontrollable. It's uncensorable in many ways. So let's see what else he has to say. And this is the problem with China. When China banned Bitcoin, it was banned. They could regulate the mining because they can regulate the electricity, but they can't actually stop people from using Bitcoin in China because it's a peer-to-peer currency. So it's banned almost in name only. Now let's see what it goes on to say about China. China, once one of the world's largest crypto markets, banned transactions of digital currencies in 2021. Singapore recently strengthened regulations around retail transactions after a number of crypto exchanges imploded, including in the city-state. Now, that may be related to Three Arrows Capital, which was highly leveraged and overly leveraged, and when the crypto crash happened earlier this year, they found themselves out of pocket and not able to pay back their investors. And I know that they were based in Singapore, so I think that might be something to do with that. Although they were not an exchange, they were a sort of venture capitalist company. Now, meanwhile, Japan has recently relaxed some of its more conservative rules on listing tokens. Given its position as a gateway for China to the international market, Hong Kong was initially something of a crypto hub. The city then introduced a voluntary licensing regime in 2018 for big exchanges, but only 2 were approved for permits: BC Technology and Hashkey. One of the biggest exchanges that used to be in the city, FTX, moved to the Bahamas last year. Yeah, and if you haven't used your FTX yet, guys, use it. It's a great exchange run by Sam Bankman-Fried. He's a bit of a wonder kid at the moment, because I believe he started FTX in 2018, and it's an exchange where you can buy and sell crypto, and you can exchange one crypto for another crypto. So if you've got Bitcoin, you can swap it for Ethereum. If you've got Ethereum, you can swap it for Bitcoin. But they have many listings. So look into that. It's a fantastic exchange. So there you have it. So that's Hong Kong and crypto regulation. Don't forget to like and subscribe, people, and I'll see you in 12 hours time for the next article. Thank you.